Welcome back, madam. Welcome back, members. Now we can have the session 2 on the topic overview of GSTR 9, ITC related and other info. We have with us a very knowledgeable, resourceful person, She Annapurna D Kabra. I request She Shankar to escort the madam onto the dais and welcome with the flower bouquet. See, Annapurna Kabra is a fellow member of the Institute of Chartered Accountants of India. She has completed her DSA and Theorem course as conducted by ICAI. She has contributed the articles on VAT and GST and is a regular contributor of articles to various professional journals, including the Bangalore branch of ICAI, Karnataka State Chartered Account Association Journal and SIRC Journal and ITC Committee of ICAI. She has co-authored a book on Guide to VAT Audit and Value Added Tax in Karnataka. She has co-authored the book on VAT Audit for Institute of Chartered Accountants of India. She has co-authored the background material of indirect tax of ICAI. She has authored the technical guide to KVAT for ICAI. She has co-authored the book on discussion paper on transitional issues towards GST. She has contributed e-lecture on topic demand and recovery and other topics to IDT committee of ICAI. She is a state taxes committee member of FKCCI. She is a faculty to the GST certification course as conducted by ICAI and she is member of Bangalore study group of ICAI. She is a committee member of for development of study model for Karnataka commercial VAT officers and the regular faculty to Fiscal Policy Institute. Of what she has addressed gathering of chartered accountants, tax practitioners, dealers and departmental officers on indirect taxation matters, including GST in various forums. With this brief introduction, I present before you CA Annapurna Kabra. Over to you, madam.
Good morning. Good morning. Yeah. First of all, I thank Bangalore branch of ICI for giving me an opportunity to talk on the topic of GSTR 9, linking it with input tax credit and other information. And in continuation of the session taken by the first speaker, who is talking on the supply aspects, and I will be discussing on the other aspects, that is input tax credit and other information. So before talking on this topic, actually, we have to understand that there are certain things which is going to happen and there are certain things which has already happened. The first thing is, this annual return, I think a press release, as you are aware, the press release has already been released, saying that there is an extension of due date of annual return by 31st December, which was supposed to be by 31st December 2018, has been postponed to 31st March 2019. The second very important is, we are also supposed to comply with the other laws also, that is state VAT laws, that is KVAT laws, where you are supposed to comply for the audit, where the due date is 31st December, if your turnover is above 1 crore, and if your turnover is below 1 crore, you have to file your VAT audit report by March 2019. So looks to be that the due date only for the GST audit has been deferred and not for state VAT audit as on today. Now looking into this GSTR 9 or 9C, as you understand from the provision of the GST law, that is section 44 subsection 1, very clearly says that every registered person other than input service distributor or casual taxable person or that person who is supposed to deduct the TDS or TCS, or if he is a casual taxable person or a non-resident taxable person, he has to file the GSTR 9. So except those few registered persons, all other registered persons have to file GSTR 9. Now the issue is, what is actually GSTR 9? GSTR 9 is nothing but it is a summary of information. the informations which has been already been submitted in your 3B, the informations which has already been submitted in your other returns. When we are calling it as a summary of informations, then what informations we are going to pick it up in GSTR 9 and what informations we are supposed to give in our 9C. And the fourth aspect is, this annual return has to be filed by every registered person irrespective of the turnover. Whereas audit report, that is GSTR 9C, that is a reconciliation statement and audit report, has to be filed only when the turnover is exceeding 2 crore. So it means annual return has to be filed by every registered person irrespective of his turnover limit. Now the first issue arises, that is for basically the small registered person where the turnover is below 2 crore. So for him the option is only to file GSTR 9 and not 9C. So when there is an option to file only GSTR 9, he should only disclose the information which is already been disclosed in his monthly returns or 3B and update it to the government. So this issue was brought to the government saying that I want to declare the details as per my books of accounts, but there is no provision in the GSTR 9 to declare the details as per my books of accounts. Because any reconciliations with the books of accounts will be disclosed in GSTR 9C, that is your audit report, and not in your annual returns. Now looking into these aspects, I think possibly we feel that there is a possibility of changes in the annual return. Possibly there might be certain clauses which might be added or reduced in our GSTR 9. That is what we are expecting, but as on today the format remains the same. The fourth aspect in our annual return today, as we all know, it might be auto-populated or it might be that we have to consolidate this information and incorporate in our GSTR 9 as a consolidated amount. And please understand, this is nothing but a replica of your GSTR 1 and GSTR 3B. Whatever you have uploaded, the same information will be incorporated in your GSTR 9. So when it is already been given to the government, when it is already been submitted to the government, the same information we are again going to give in our GSTR 9 in a summarized format. Now looking into these aspects, one more very important is, what is the objective of filing GSTR 9? Very importantly, GSTR 9 is not to be signed by any auditor or any professional. GSTR 9 has to be authorized or signed by a registered person itself. So whatever we are going to incorporate the details in our GSTR 9, it has to be authorized by a registered person and not an auditor. Whereas GSTR 9C and the audit report has to be acknowledged by an auditor. So when you are going to acknowledge in your GSTR 9C in reconciliation with your GSTR 9, it means indirectly you are acknowledging the figures as stated in a GSTR 9. And the seventh very important aspects what we are looking in GSTR 9 is, basically the structure has created a confusion. There are certain tables in GSTR 9 which says that you have to pick up the informations only which is pertaining to July 17 to March 2018. Whatever you have incorporated in your 3B or GSTR 1, only those information has to be picked up in your GSTR 9. And there are some tables in GSTR 9 which says that you have to incorporate the figures from April 2018 to September 2018 in a separate column as amendment table. The transactions will be pertaining to 17-18, but if you have made those amendments in April to September, even those also should be incorporated in your GSTR 9. So ultimately, we have to sum up the details not from July 2017 to March 2018. We have to sum up the details up to September 2018 also. So more or less it is exceeding 1 year what we are going to sum up the information. And the tedious task for all of us to understand is the extraction of information from April 2018 to September 2018 pertaining to the year 2017 and 18. Are you getting that? So that is what we have to, that is what the extraction of informations we have to take it up. There are certain tables which is very, very specific, saying that even though you have done amendments in April 18 to 17-18, though it is pertaining to 17-18, it has to go to the respective tables. It can be increasing your output tax liability, or it can be decreasing your output tax liability, or it can be increasing your availment of credit, or it can be a reversal of input tax credit. It means government wants two types of informations. One information which is giving the information of July 2017 to March 2018, and one more information saying that what amendments you have made it from April 2018 to September 2018. This is the second aspect. The third very important aspect, morning when we were learning on supply aspects, where you have to disclose the supplies which are declared in your returns. It can be taxable supply, it can be exempted supply, it can be non-GST supply, it can be export supply, it can be B2C supply, or it can be B2B supplies, it can be a deemed supplies. So there are various kinds of supplies which we are disclosing in our supply table. So once this supply table we are disclosing, it means we are also simultaneously declaring the tax component involved in that. And let us remember that there is only one annual return which will be disclosing all the informations pertaining to your state GST, central GST or IGST. So it is nothing but a consolidated information of supply aspects. Now coming to the other aspects of GSTR 9, that is input tax credit. Actually, if you see input tax credit, we are not declaring any input tax credit in our GSTR 1 because GSTR 1 is purely based on outward supplies. So when it is based on outward supply, what is the source of information for us to pick the data for input tax credit? There is no option as such. Only we have to pick the data from GSTR 3B. And when we have filed GSTR 3B, it is a consolidated information which we have filed in 3B. Though the table asks in 3B, what is the credit pertaining to your import of goods, credit pertaining to your import of services, credit pertaining to your reverse charge, credit pertaining to your other inputs, all this breakup are given. And what extent you have reversed it and to what extent it is eligible, but in most of the cases, it is a consolidated amount which we have incorporated in 3B. Whereas today GSTR 9 is asking a detailed information of that. In 3B, we have not bifurcated how much is inputs, how much is input services, what is capital goods. We have just given a consolidated figure in our 3B. Whereas GSTR 9 requires the breakup of all these components of your input tax credit and its eligibility. So with this background, let us first understand what are the assertions we should know actually before going into these aspects. Whether input tax credit has been correctly taken. That is the task for all of us to understand whenever we are going to file GSTR 9 or GSTR 9C. That is the most important aspect when you are going to arrive the tax liability. The very important aspect is whether input tax credit has been correctly taken. The second aspect we have to understand that whether returns have been accurately filed. Whether the input tax credit has been disclosed on estimation basis or it is on actual basis. I think in many instances we have seen that they say that okay, you take this month 5 lakh credit, we will see later on. We will reconcile with all our input figures at later point of time. So many times a consolidated informations are given for input tax credit. So that has to be seen whether it is accurately given or it is based on the estimation basis when we have filed 3B. The third very important is whether records or documents have been correctly maintained. That is very, very important to claim a credit. You cannot claim credit only based on your assumptions or on any other aspects. There are certain compliances which you have to comply to take a input tax credit. And basically section 35 very clearly says that every dealer has to maintain the books of accounts not only on production or manufacture, not only on outward supply, they should also maintain the details for inward supplies. They should also maintain a detail of input tax credit availed. So it means even the law requires that you have to maintain a detailed documentations and records for claiming a input tax credit. Whether exhaustive reconciliations of supplies are in place, very important is, I think the task is only reconciliation for all of us. What are the possible reconciliations we are supposed to do to comply with the law? First reconciliation is GSTR 3B with GSTR 1. Yes? That is the first reconciliations we have to do. The second reconciliation is what is the GSTR 9 with your 9C. The third reconciliation is GSTR 9C with your books of accounts, with your audited books of accounts. It means there are different steps of reconciliations we are supposed to comply under the GST law. So this kind of exhaustive reconciliation has been made or not. And the fourth very important aspect is annual return is not catching the informations. It is not catching the information on difference between 3B and GSTR 1. It is nowhere catching that information. Possibly there are some suppliers who have filed GSTR 1 but have not filed 3B. And there are certain suppliers who have filed 3B but have not filed GSTR 1. And there are some suppliers who have not filed both. So what is the implication of this? What is the implication of reconciliation? Is it your 3B is correct, or your GSTR 1 is correct, or both are wrong, or both are correct? So there is no certainty of picking the informations. That's why GSTR 9 has come out with the instruction that whenever you are picking your outward supply details, pick it from GSTR 1. And whenever you are picking the details of input tax credit, pick it from GSTR 3B. So this is the source of informations for drafting your GSTR 9. Though you would have filed 3B for certain registered suppliers, you don't have filed GSTR 1. But basically the instruction says that you have to pick the information from GSTR 1. So I think this is the way we have to understand when we are drafting this GSTR 9 or 9C. Now let us briefly understand the key provisions as applicable for input tax credit. Generally, input tax credit is available in normal circumstances. If you compare the erstwhile law, the input tax credit is very wider in the GST law. The very basic conditions to avail the input tax credit is furtherance of your business. That has made the input tax credit one of the wider in a GST law. So basically it is available in normal circumstances. It is available in normal circumstances subject to that you fulfill certain conditions. The first condition is that you should use it for your furtherance of your business. The second condition is that you should receive the copy of invoice or debit note or tax paying document. The third condition is that you should receive the goods or services. The fourth condition is that the supplier should pay the tax to the government. And the fifth is the supplier should file his return. Now we all are stuck in supplier paying the tax to the government. This condition we are not able to track it based on the records available. We are not able to track with the details available as your supplier has paid the tax or not. So I think this is what the annual return is going to catch the information in one of the table, that is table 8, where it is going to catch the information on basis of what you have, your supplier has disclosed in his GSTR 1 and what you are taking a credit. If your supplier has not disclosed that information in his GSTR 1 and if you have taken the credit, it will be shown as a negative amount. But if your supplier has filed the GSTR 1 and you have not taken the credit, it is lapsed. So very important is this comparison is there in table 8 of your GSTR 9, which is very, very important table which gives the informations to the government saying that to what extent your supplier has disclosed and to what extent you have enjoyed the credit. That we will see in detail, but that is what the information is asked here. Now ITC is available in special circumstances. What can be your special circumstances? Possibly when you are applying for your registration first time, you are eligible to take a credit of your stocks. When you are going for voluntary registration, still you are eligible to take credit on your stocks. When you are shifting your scheme from exempted to taxable, or when you are shifting your scheme from composition to regular, you are still eligible to take a credit on your stocks and capital goods. So this is the input tax credit which is available in special circumstances. In addition to that, you also get a credit like a transition credit. That is also a special circumstances credit. So these are only a credit which depends on the occasion or on happening of a transaction or happening of an event. Otherwise, these are that's the reason it is called as a special circumstances audit. Input tax credit. Now we have something called as, if you read in the GSTR 9, there is some terminologies which they have used it. They have used the terminology as availed, allowed or utilization. We feel that it is more or less the same terminologies, but there is a difference in that. What do you mean by availed actually? The business concerned, the registered person can take a decision that I will not avail this credit. For example, I am a registered person, I have purchased printing and stationery, I cannot maintain the detailed record of that input tax credit on printing and stationery, so I come out with a policy decision that I will not avail the input tax credit. That is called as, and if you are taking a decision that you are going to avail the input tax credit on that, then it becomes a availed. Please remember on this. That is the reason we call it as availed. It should be availed in your return. It is not enough if it is availed only in your books of accounts. It should be availed in your returns. Then only it is called as availed. The input tax credit availed actually. Yes. Allowed. The very principle is you should see what is the test of disallowances. When it is allowed, there are certain circumstances in that if it is allowed. For example, you have not physically received the goods. You have received a copy of invoices, but you have not received the goods. Is it allowed? You cannot call it as allowed. Why? Because the conditions to take an allowance is not fulfilled. So that is the difference between availed and allowed. There are certain conditions attached for availment of credit and for allowing the credit. If you are not receiving the goods or if you have not received the copy of invoice, you are not allowed to take a credit. So that way we have to understand the difference between availed and allowed. Then what is utilization? Utilization is nothing but it is offsetting your liability. I'm using the same terminology which is used in a GSTR 3B. You are offsetting your liability by taking a credit, by adjusting with your credit. That is known as utilization. So whatever you have an output tax and whatever the input tax credit, you are utilizing it for paying your output tax. That is called as utilization of credit. So there is a difference between availment, allowing and utilization. So we have to be careful when we are looking into this aspect while filling GSTR 9 or 9C. Then the next aspect is ITC restricted and ITC ineligible. Generally we use the terminology as per our whims actually, but it has to be used in its special occasions. If it is ITC restricted, it means it is you are restricting with the special conditions. For example, Rule 42 says that you have to apportion your credit between eligible and ineligible, between the taxable supplies and exempted supply. That is called as you have to restrict your input tax credit to that extent. Whereas when we are talking it as an ineligible, it means it is ineligible because you have used it for non-business purpose, you have used it for a specified purpose, or it is a block credit. So that way you can call it as an ineligible credit. Actually, first of all, it should be eligible to become a ineligible credit. So that way we have to understand the restricted credit and ineligible credit. Then basically we use the terminology of block credit. In GSTR 9 there is a section, they have not given the terminology as block credit, they have used the section 17 subsection 5. So wherever they have used 17 subsection 5, it is nothing but a block credit. Block credit is the credit which is actually used in the course of furtherance of your business, but it is blocked by the provision of the law. What are the such type of credit actually? For example, certain input tax credit which is pertaining to your like rent-a-cab, health insurance, certain perquisites for your employees, sale of food to an food providing to your employees, your gifts, your written off, lost, destroyed, personal purpose, composition. So they have specified various type of input tax credit pertaining to this as a block credit. Though it is used in the course of your business, but still you are not eligible for your credit. Input tax credit pertaining to your motor vehicles, other than those 4 specified cases. They said that, for example, I'm a chartered accountant, I use the car for providing my services, I'm not eligible for credit. Though it is used for my furtherance of my business, but still it is not eligible for credit. Those type of credits are called as block credit. Yes, so that way we have to understand. Then we have something called as ITC recoverable. This terminology ITC recoverable we use only when it is recovered by the department. But actually we also have in the provision of law as ITC recoverable. What are the scenarios where your ITC can be recovered? It is basically applicable for input service distributors. When input service distributor distributes the credit to its units across India, and if it finds that the credit distribution is not correct, it can recover that input tax credit which is already been distributed to its units by issue of debit note or credit note. So that is called as you can recover it from its own units. The recipient will not claim the credit more than what it is required. So that is what we have to understand as ITC recoverable. ITC to be reversed in special circumstances. What are the general circumstances where we see that it should be reversed? Basically the law says that if you are shifting it from say composition scheme to regular scheme, you are eligible for credit. But if you are shifting it from regular scheme to a composition scheme, then you have to reverse your input tax credit on the stock, because under the composition scheme you are not eligible to claim a credits. Yes, so this is a reversal in your special circumstances. Or for example, your product was taxable and suddenly we realize that there is a notification passed on saying that it is exempted from the taxation. So in that case, whatever the input tax credit you had in your stock, that has to be reversed to that extent. I think as you all are aware, many times input tax credit has become a cost. Many times the decisions are taken based on your input tax eligibility of your input tax credit. And I think when we are talking on the rate notifications, for example 5% or 12% or whatever the rate we are determining depending upon the nature of services or supply of goods, conditions are attached. If it is a catering services, they say that or a hotelier services, they say that it should be 5% without input tax credit. Or if you are going with a GT option with 5% or 12%, if you are going with the option of 12%, you say that input tax credit is eligible. If you are going with 5%, they say that input tax credit is not eligible. It means what? Your output rate of taxes is deciding based on your condition attached to that rate of taxes. So that rate of taxes is not independently decided. It means if you are going to opt for, when you are going to take that rate as your output rate, you have to simultaneously see the impact of input tax credit on that. And morning we were listening that there is no option for us to go with the either of the option as 5% or 12% unless it is an optional stated in the notification in 11/2017. It means what? Compulsory, mandatory, we have to treat this as an ineligible input tax credit. Are you getting that? So this is the aspect we have to look into the rate of taxes with attach the input tax credit criteria. So that is what we have to see in reversed in special circumstances. Then basically inward supply from unregistered suppliers. I think this was the questions maximum. I think RCM was a question in the initial years of GSTs. Whether I am liable to pay tax on URD purchase. Fortunately, it has been deferred up to September 2019. That is up to September 30th, 2019. You need not pay any reverse charge tax on your URD suppliers. But many instances it has happened that we have assumed that both 9.3 and 9.4 are deferred. Only 9.4, that is inward supplies from unregistered person as stated in 9.4 or 5.4 of your IGST Act only is deferred. It means notified supplies under reverse charge is still under the liability. So when you are going to calculate these informations from your books of accounts, you have to calculate the reverse charge tax paid from your unregistered supplier and the reverse charge tax you have paid it on your notified supplies. So that is very important because this informations you have to pick it up from the documentations what we have maintained it. Whenever you are doing any reverse charge supplies, we have to issue a self-invoice and payment voucher whenever you are taking these inward supplies from unregistered suppliers. So very important, this documentation is very important to avail the credit on your reverse charge. Notified supplies liable to GST under reverse charge. Actually in GSTR 9, if you see a column 5B, which pertains to a supplies where the recipient is liable to pay under reverse charge. Many times we might confuse this saying that we are liable to pay under reverse charge. That is not the entry it is asking. Already the entry 4G is covering on that aspect of inward supplies. 4G and 4F is already covering that. So here we have to enter only those supplies where my recipient is liable to pay under reverse charge. What can be those transactions actually? Basically this is very, very specific transactions. For example, I am a goods transport agency and I will be supplying the services to my recipient at 5% and 12%. If I am charging the rate at 5%, then my recipient is liable to pay under reverse charge. That supply should be disclosed here. Whereas if you are charging 12%, it will go to your B2B transaction or B2C transactions. So depending upon the rate of tax you are going to charge, accordingly you have to disclose it in your GSTR 9. So that is what we have to remember on this. So notified supplies, for example, instead of reverse charge, you have already paid to your supplier. Are you eligible for credit on that? Because GTA services had charged you 5%, you were liable to pay under reverse charge. You have not paid to the government, you have paid to your vendor. Are you still eligible for credit? Yes or no? Because reverse charge is also one of the additional liability. 9(4) very clearly says that even though you have paid to your supplier, kindly ask your supplier to issue a credit note and pay the tax to the government, because it is your liability to pay to the government. You cannot take an excuse that I will not pay the tax under reverse charge because already I have remitted this amount to my vendor. So that is the way we have to be careful when you are talking on this. So notified supplies liable to GST under reverse charges only a specific transactions has to be incorporated. Then credit on import of goods. I think we are aware that import of goods is governed by your Customs Act. But still there is a levy of IGST on import of goods. So in that case, that IGST, whatever we are paying on our import of goods, subject to that it is used for your business purpose, is eligible for a credit. But these informations will not be extracted from your 2A. These informations will be extracted from IceGate portal, and with that access you will get to know what input tax credit you have paid, what IGST you have paid on your import of goods, and accordingly it has to be disclosed. Sundry creditors written off. I think very, very important aspects of our audit today is verification of sundry creditors. Now the issue is sundry creditors, the issue invoice issued after July 1st or sundry creditors balance prior to 1st July 2017 is very, very important. Why it is very important to verify the sundry creditors written off? Because when we purchase the goods from a creditor or when we take any services from our creditor, the law is very clear that if you want to avail the input tax credit on those creditors, you have to make a payment to that creditor within 180 days. If you have not made a payment within 180 days to your vendor, you are liable to reverse the credit whatever you have availed it, and then you have to pay it with interest. Now the issue is you would have availed the credit, and later on you decided that you want to write off that sundry creditor. So whenever we want to write the sundry creditor, please see that whatever the tax component you have availed the credit, whether it is also written off simultaneously. Yes, as long as that sundry creditor itself is not there, there is no question of availment of credit on that sundry creditor. So we have to be very clear on this whenever you are writing of sundry creditors from July 2017 to March 2018. Retention amount held back. I think this is the main common transactions which we are seeing in day-to-day life. And recently, last week, there was a decision under the service tax law saying that if the service tax component is paid on your retention amount, though the amount of retention is not paid to your vendor, but only the tax component is paid to your vendor, you are still eligible for credit. But that logic will not apply we have to wait and see how it is going to be ruled in the GST law. Because GST law section 16 subsection 2 very clearly says that if you want to avail the credit, you have to make a payment to your vendor within 180 days from the date of invoice. So once this invoice is already issued, if you don't make a payment within 180 days, though that holding up that retention amount will reverse your input tax credit. So be careful when you are looking into this aspect also. Conditions of 180 days is not applicable in certain circumstances. What are the certain circumstances where this 180 days is not applicable? I think that is more where we are looking actually. It is not applicable in your Schedule 1 items. That is, any deemed supplies as notified in Schedule 1, this 180 days is not applicable. Illustration, for example, if you are making a stock transfer from one state to the other state, I think you all are aware that there is a levy of tax on deemed supply, though there is no consideration flowing from one branch of one state with the other branch of other states. So in that scenario, I will be charging the tax to my branch and my branch will be enjoying the credit of that. Am I right? There is no flow of consideration. When I make a stock transfer to my branch and my branch accept it as with invoices, and I will be charging to my branch as IGST, and my branch will enjoy the credit of IGST. In that case, the payment of this 180 days is not applicable. So there are certain scenarios in which this payment of 180 days criteria is not applicable. The second scenario is 180 days, this reverse charge. Payment of amount in case of reverse charge, that 180 days is not applicable. So these are the two circumstances. You need not look this 180 days when you are computing the credit in these two scenarios. Now the most important is time limit to claim credit. This is the painful for all of us now. Why? Because already the time limit has been elapsed. What is the time limit as per subsection 4 of your CGST Act? It clearly says that the input tax credit can be availed on tax invoice or on issuance of debit note within a due date of filing of return of September or annual return, whichever is earlier. As you all know, annual return is still not effective till today, so we have only one option. What is that? Due date of filing your September returns. So the due date of September return was actually October 20th, then later on they deferred it to October 25th, 2018. Now the issue is, as the time limit has already been elapsed, can we claim that credit which we are able to identify from the books of accounts? That is a worry for all of us today. Many of the credits are identified in the books of accounts, but it has not been incorporated in your GSTR 3B. And many of the input tax credit are there in your 3B, but it is not incorporated in your books of accounts. So in such scenario, what is the time limit? Can we take that time limit as 180 days? Sorry, this time limit to claim the credit up to 20th October or 25th October. After that, can we take a credit in our 3B? Now the only benefit what we can look into is, as we have already claimed the credit from April to September, which also includes the credit pertaining to the previous year, which also includes the credit pertaining to the current year, we can draw some privilege saying that yes, some credit can be pertaining to the previous year also. Though that is not there in the law, but something we can see if you have already taken in the books of accounts based on that assumptions. Yes, that is only the assumptions I am saying. Otherwise, we have to see that as per the books of law and as per the input tax credit as filed to the government. Now, dual benefit of input tax credit, that is very, very important. Whether we have enjoyed the dual benefit of credit, what are the possibilities in which we can enjoy dual benefit? One is, you are taking the credit on that, simultaneously you are claiming it as an expense. Or, you are also claiming a depreciation on tax component, simultaneously you are taking that credit as a eligible input tax credit. Possible? There are no dual benefits which is allowed in the GST law. So we have to be very careful which option I have to take it. Whether I want to capitalize this expense or whether I want to claim this as a revenue expenditure, or should I claim it as a eligible input tax credit. If you are claiming it as a credit, it is always a credit. If you are claiming it as an expense, it is always an expense. And please remember, if you have already availed or if you have not availed, you have the option of availing later. But if you have already taken it as an ineligible, you don't have an option to claim it as eligible input tax credit. So that is what we have to be very careful to classify it as availed credit or ineligible credit. Once you have classified as an ineligible credit, it cannot be again later on said that it can become your eligible credit. So that's what we have to see. There should not be any dual benefit of your input tax credit. Retentions, we have already looked into that. ITC restored is one of the thing we have to see that, is it possible that you can restore your ITC? For example, last year you have claimed the credit or you have expensed that credit actually. But this year you are aware that that credit was eligible. Can I restore that credit in your books in the current year? Because you have already expensed it off in your previous year, can you restore that credit in the current year? That is the way we have to see, because because when you have already claimed as an expense, can you restore that credit? According to my view, it is not possible, but we have to see upon the financial impact on that same, how it is going to impact it. Can you take it as a prior period item and enjoy that credit? That is accounting implication we have to see simultaneously whenever you want to see that ITC restored amount. ITC eligibility to composition suppliers. As we all are aware that composition suppliers are not eligible for any ITC, but still the composition suppliers are required to give the details of input tax credit as ineligible or reversed. The 2A is also reflected to your composition supplier. So that way we have to, that is additional information for composition supplier. It doesn't matter for them whether it is eligible or ineligible. ITC in case of job work. Section clearly says that whenever the inputs are sent for job work and if the goods are not received back within 1 year, then it is deemed as supply. But once the goods are sent for job work, the principal can take a credit on those invoices, whichever he has supplied the goods as to a job worker for job work activities. Possibly that invoice will be raised by the principal to the job worker, or it is a possibility that the vendor will raise an invoice in the name of principal but will be delivered to a job worker. And basically whenever the goods are going from principal to job worker, it is not a supply unless that conditions is not fulfilled. It is only a delivery challenge is used for moving the goods from a principal to a job worker. So that will decide your impact of your input tax credit. So that way we have to look this input tax credit and linking to your job work. Now very important is whether this job work we have to see up to 31st March 2018 or should you look till the date of your audit. Because this act is applicable from 1st July 2017. So the law says that if the goods are sent as inputs to a job worker, if it is not returning within 1 year, then it is treated as supply. So should we look these transactions up to 31st March 2018 or should you look till the date of audit? Date of audit? So whether we have to see that within 1 year whether the goods have returned back or not. Why? Because the law says that it is treated as deemed supply from the date of issue of, from the day when the goods are sent out. But technically, can we again revise every time each old month return and say that no, it is pertaining to that period? Though the time of supply has occurred during that period, but the levy is the point when you have identified it. So according to my view, it should come in your 3B or it should come in your monthly return and not in your annual returns. And possibly what I think that it can be an observations, you can state it in your audit certificate, but there will be no levy of liability in your audit report, it will be only a liability in your GSTR 3B. So that way we can see for, in case the goods are sent for job work. And many times the goods are also sent on approval. So the law says that if the goods sent for approval are not approved within 180 days, then it is treated as supply. So in that circumstances also you have to see what is the input tax credit. It is pertaining to such supply which is sold on approval. So if it is not approved within 180 days, it is deemed as supply and accordingly you are eligible to claim a credit of that. So that way we have to look this key provision of your input tax credit. Now this is the most important question for all of us to understand whether additions or deletions can be made in annual returns. Yes or no? If you say yes, I will talk accordingly. If you say no, I will talk accordingly. Yes or no? Whether additions or deletions can be allowed in annual return. Additions, sir? Oh, additions no, deletion yes. One more answer, I got it. Anybody who is saying deletion yes, addition no? Actually, you cannot. No option. Whatever you have declared in your 3B and GSTR 1, please disclose only those informations. So there is no such additions or deletions which you have captured from the books of accounts, but which is not there in your 3B or GSTR 1. So that is why we have to accept as on today that there is no, it is a no actually. You cannot add or delete anything in your returns which is already been filed in your 3B or GSTR 1. And one very important question is, in your 3B already you have claimed a credit of 5 lakhs. You know that it is absolutely wrong. In your 3B it is showing as 5 lakh, whereas your books of accounts is nowhere identifying that 5 lakh as credit. Can you disclose that in your annual returns? No option. You have to disclose only in a variance report in your form 9C, but you cannot disclose in a 9C. It means if you have made a mistake in your 9, and if you have incorporated that, if you have made mistake in your 3B, and if you have made that mistake in you know that it is mistake, but still that mistake should be incorporated in return, and you should ask your registered person to sign it. The only worry is how registered person is going to sign this return when he knows that as per his books of accounts, this credit itself is not there. Whereas we are saying, no, it is there in 3B, so it should be compulsory be there in your GSTR 9. So that is the task I think we all have to experience when we are going to give our annual return for signing to our registered person. What the suggestion was made is, I think we have to wait for the implementation of suggestion is, one of the suggestion given is, please give out a column, separate column to disclose whatever is as per books of accounts. Or at least come out with one column saying that, okay, whatever is the difference between 3B and GSTR1, that one difference you can make it for outward supply, and for input tax credit at least you can come out with a table of GSTR 3B and books of accounts. Or some summary report can be helping out so that we can give the right information. Or they should allow, for example, I have taken this credit as regular credit, but actually it is not a regular credit, it is a IGST on your imports, let us assume. But for GST return, what I should say? I cannot say that it is GST on import, I should still say it is a inward supply credit. I know that it is IGST on import. I made mistake when I filed my GSTR 3B. But there is no option left me out. If I've made mistake, that's what I'm saying. If I made mistake in 3B, I'm repeatedly made to do that same mistake. That is the challenging for all of us. Then this data is already been submitted, then what is the requirement? So why this the law very clearly says that please incorporate it. I want only summary information. Give whatever mistakes you have done, give whatever the corrections you have done it. I will just compare it with my books of accounts, and if there is any difference, we will see accordingly, we will offer for the liability. So I think that way we have to understand the GSTR 9 as on today, that whatever is the GSTR 3B information you have incorporated, please incorporate only the same figures in your GSTR 9. So that is the summation of information which we have to give it. Then the next aspect is transitional credit. I think last year we were struggling to file transitional credit during this period actually, because it was September, then they extended up to December actually. So when we were filing this transitional credit, as being a new law, we all have filed transitional credit with certain corrections, with certain wrong entries, with certain correct entries. Now there is no option also. They just gave an option only up to 31st December. Now if I want to file the transitional credit, I don't have any option to file it. During the audit also, if I am able to observe certain transitional credit which was eligible, but there is no option given for me to disclose that figure except as a marking in observation in my certificate. Now the transitional credit which have already been filed, and if it is approved, what happens? It will get credited to your electronic credit ledger. If it is not approved, it is still lying in a transitional form. And I think you are aware that in many of the cases, we were not able to file this transitional credit because of certain technical issues also. And in some of the cases, we were not aware also that this has to be filed by 31st December. So that's why our writ petitions were filed on these issues, and accordingly we have to wait what further, whether they are going to open the window only for technical glitches, or whether they are going to open the window for all the registered person. Now this transitional credit, if I have claimed it correctly or wrongly, as it is going to sit in my electronic credit ledger, and I have enjoyed that credit, should I report it in my GSTR 9 or 9C? You are aware that it is absolutely wrong. There are certain transitional credit where the decisions have come later, like KKC, I think you all are aware. Cess was the most argument everywhere actually, whether KKC, this service tax education cess, basic education cess, secondary higher education cess, whether you are eligible to take it as a transitional credit. What most of us have done, we have made an attempt and we have shown it as a credit. But there is an advance ruling which has been passed saying that you are not eligible for credit on KKC. What it signifies? It means you have to reverse your transitional credit. That reversal you have not made it in the last year, that reversal you are supposed to make it in the current year. It means what? For that year it is lying as a transitional credit. Though it is ineligible, but still in your return you have to show what was the transitional credit you have claimed it in that year. Please understand, we should see also the compliances of transitional credit. Don't just see the eligibility and ineligibility of transitional credit. We have to see what the claim of credit we have claimed is correct or not. There were certain transitional credit for capital goods. There were certain transitional credit for transit transactions. There were certain credit for your exempted, which was exempted and now it has become taxable in the GST law. There were certain transitional credit when the goods are sent to an agent. There are certain transitional credit when the goods are sent to a job worker. And there was also a transitional credit where it says that payment should be made within 90 days to your vendor. If you're not making a payment to your vendor within 90 days from the 1st July, you have to reverse your service tax credit. For example, I have issued an invoice under the service tax law. I have made a payment of that. But the recipient will not enjoy the credit if he has not made the payment of that credit within 90 days from 1st July. So these are the transitional issues which we have to see it simultaneously for looking the eligibility of credit, and this will become your audit observation, and nowhere it is concerned in your GSTR 9. GSTR 9 says whatever you filed, please incorporate it here. So that is the way we have to look. If you have revised your transitional credit, please incorporate the revised figure, because there is only one column which is asking the informations on trans 1 and trans 2 informations. So trans 1 and trans 2, if you have to again review that and see that whether the credit is correct or not. Due to technical glitches, I think if it is rectified in 1819, then it will become as a credit of 1819 and not 1718. So that we have to be careful on your transitional credit. Direct nexus between input and output is required. This is the most common questions we have for input tax credit. I'm a advertising service, I'm also a caterer, I'm also doing multiple activities. I'm also an operator, I'm also a trader. Is it that nexus is required always of my inputs with my output? Is it required? It is required only in certain cases. Otherwise, it is a common bunch of your credit which you can utilize for your output services. Basically, this nexus has to be seen only for the block credit actually. What is this block credit? For example, input tax credit paid on your purchase of your motor vehicle, which is used for what purpose? If it is used for transportation of goods, yes, it is eligible. If it is not used for transportation of goods, if it is used for providing the service, then it is ineligible. In that scenarios, we have to have a nexus of your inputs with your output. For example, you are distributing the goods as samples. What 17.5 says? Whenever you are distributing your inputs as samples, you are supposed to reverse your input tax credit. It is an ineligible input tax credit. So in that scenario, what we are supposed to do? We have to reverse the input tax credit. So that way we have to look into the nexus. For what purpose these goods are used? Is it used as a free sample? Or is it as a gift, or is it a free supply? So accordingly, you have to link your input services with your output services in specified cases. If that condition is not fulfilled, otherwise no nexus is required between input to your output. So that way we have to look this nexus between input and output. Now the next issue is missed input tax credit to record in July 17 to March 2018. Let us assume that we have missed to record it in your July to March 2018. We would have added in your April 2018 to September 2018, or we would have missed in that also. What is the option for us now? It should be disclosed only in your audit report. Please don't try to disclose in the others column in your GSTR 9. The very most condition, one of the clause as 6H of your GSTR 9 says non-payment within 180 days to supplier. There is a column in GSTR 9 which is called as 6H of your GSTR 9, which says that if you are not making a payment to your supplier within 180 days, you have to, there are conditions attached to that. First, you have to avail the credit. Then, if you have not made a payment within 180 days, you have to reverse the credit. And after you make a payment, you have to claim that credit. Only that will be incorporated in your 6H of your GSTR 9. What does it mean? For example, invoice is raised on July 1st, 2017, and by December 2017, I have not made a payment. That is, within 180 days, I have not paid a payment. Then in January 2018, I have reversed it. Yes? Then in March 2018, I have again made a payment to my vendor. So in that scenario, what happens? That should be disclosed in your GSTR 9. Are you clear on this? Only those transactions where you have availed it, where you have reversed it, and again reclaimed it should be disclosed in your GSTR 9. Let us assume he has not made a payment in March, he has made a payment in, say, August 2018. So in that scenario, should it be disclosed in GSTR 9? Yes or no? Because you have availed it, you have reversed it, but you have made a payment in the April to September. That will not be disclosed in your GSTR 9. That will be shown only in your amendment column and not in your original columns. Yes? To disclose in your original column, it has to be availed, reversed and reclaimed it. These three conditions are required for taking a credit on payment to a vendor within 180 days. Then we have a formula, I think we all are aware in Rule 42 and 43. There is a provision given in Rule 42 saying that you have to recompute your common input tax credit. Basically, this Rule 42 is saying that identify your input tax credit for the activities. Here we can say it is having a nexus with your activity. What is, for example, if you have a common input tax credit, to what your extent credit you are using it for non-business purpose? To what extent of your input tax credit you are using it for your exempted purpose? To what extent of your input tax credit you are using it for your specified taxable purpose? After that, if you have any common input tax credit, that has to be apportioned between exempted supply and taxable supply. So that formula has to be calculated monthly. This formula has to be calculated yearly also. Are you getting that? Every month we have to calculate and yearly we have to calculate. And if there is any variance between the monthly formulas and yearly formulas, if you have not taken excess credit, please add it to your output tax liability. And if the credit is taken less, then it has to be availed it within the specified time limit. That's why to recompute that formula was also till September due date of filing the returns. So that is what we have to understand. Whenever we are calculating this formula, we have to do monthly and yearly. Assuming we have not done till today. Again, this becomes as an observation in your audit report saying that to this extent it has to be reversed with the interest or penalty as the case may be. Rule 43 is meant only for capital goods. So that also has to be apportioned between your taxable activity and exempted activity. And please remember, this yearly formula is not applicable for Rule 43. Yearly formula is only applicable for Rule 42. Yes, that is only applicable for input and input services and not for capital goods. Availment of credit of trans to. Actually, trans to credit is linked with your sales. It is linked with your supply of goods in the GST law. There was a condition attached that if you want to take a credit on your stock, like I think you are aware, we availed that 40% and 60% credit as trans to credit. That was subject to the condition that you should make a sale within a specified time. If you have not made a sale within the specified time, you have to reverse that credit. So that is the way we have to look into this trans to credit also. There are certain other reversals like change in scheme, sale of capital goods. So basically I think we understand that whenever there is a sale of capital goods, the financials are only taking a profit or loss on sale of capital goods. The financials are not absorbing the sale consideration received on capital goods. So in that scenario, we have to see from the GST perspective, what is the input tax credit which is pertaining to a sale of capital goods. Because according to the GST law, the life of capital goods is 5 years. And if you have not enjoyed that credit for if you have not utilized that capital goods for next 5 years, you have to reverse the input tax credit pertaining to your capital goods. For example, you purchase certain capital goods, you have sold it after 2 years. You have to reverse the input tax credit for balance 3 years. So that is what we have to arrive at, and accordingly we have to reverse the credit accordingly. Yes? And sale of capital goods, we have to offer the GST, and profit on sale of assets will be shown as your turnover item in your reconciliation item. So all those things, input tax credit, you have to link with your capital goods also accordingly. Input credit claimed as reverse charge credit is declared as inward supply. This we are talking only on wrong classification. We would have made this wrong classification in 3B or in your GSTR 9. So we will just see what is the implication of that. Input tax credit claimed as reverse charge credit declared as inward supply credit. So we did not bifurcate all this in our GSTR 3B. We said all credit will go to your others column, that is all your inward supply credit. Will it affect my GSTR 9? Because GSTR 9 is very clearly asking you the information on reverse charge credit also. Whether it can be from unregistered supplier or it can be from registered suppliers. So as we have not disclosed in our GSTR 3B, will it going to disclose separately in your 9? Yes or no? I think we should say yes or no. Yes or no? Should I disclose it in my GSTR 9 as reverse charge credit? No. I just paid on import of goods. Still you are classifying as inward supply. It is better because import of goods, it will not get reconciled with your 2A. It has to be reconciled with the other portal. So that difference you can find it out because of misclassification. Then input tax credit on deemed supply. Payment within 180 days is not applicable as we have discussed. So deemed supply, whenever I am receiving any stock inwards, I am not identifying the transactions in my books of accounts as stock inward with taxes. So in that case, you are eligible for credit only on that tax component. So just see that whether this tax credit has been disclosed in your 3B or not. Because this will be your regular inward credit. This is not a reverse charge credit. This will be your regular credit. As a branch, you are eligible to take a credit on your stock inward also. So accordingly, you have to see on this. Reverse charge payment is not applicable, and this we have already discussed. Wrong classifications. Okay, if you have availed the benefit of depreciation and claim input tax credit, what is the option for you now? What is the option for you? Pay the taxes? Because in GST law, we don't have any option to set off with your existing credit. Whenever you have done any wrong credit, you have to add it to your output tax liability with interest. You cannot say that, no, I have the credit in my credit ledger balance now, I will set off with that balance. Not possible. You have to pay it as a liability on this. So which option you want to avail, you have to decide it. Because there is no mandate that you cannot avail one of the option. You can avail one of the option, and accordingly you have to pass the transactions accordingly in your audit report and books of accounts. Block credit. I think if you see in 17.5, there are certain expenses pertaining to your construction where they have stated that if it is capitalized, then it is not eligible. But if that expenses are not capitalized, for example, maintenance of this building, this is only some small maintenance which I have got it done for my building and I have not capitalized to my building. I treat it as a revenue expenditure. In that case, you are eligible for credit. But if you are capitalizing that expenditure, then it is called as ineligible input tax credit. So just recheck on the capitalization or revenue expenses for your block credit. Just look a classification for that. Then ITC on employee director expenses versus ITC on business expenses. Many times employees incur these expenses, they get the bill in their own name and then they take a reimbursement from the company. So whether input tax credit is eligible in such scenario. It is not eligible unless the employee takes the bill in the name of a company. If he takes in his individual name, then it will not be reflected in 2A of your company. So that's what we have to look into this expenses versus ITC on business expenses. Then I can give you one more example here. Like for example, I just gone for Facebook advertisement and I made a payment to my vendor through a credit card of my director. So this is being an import of services, I am liable to pay under a reverse charge. Can I claim the credit of that? We have to see the invoice, what it is raised, whether it is raised in the name of director or whether it is raised in the name of company. Only the payment mechanism has been used by using a director credit card, whereas the invoice is received in the name of company. Is it permissible? The payment is made from some different, from a director account, not from the company account. Or many times employee will incur from their payment is made from the employee account and later on they reimburse from the company. So in such scenario, I think even if the payment is made, but it is invoices in the name of company, I think it is still eligible. Yes? So that way we have to see ITC on employee expenses versus ITC on business expense. So that way we have to correlate it. Classification of common ITC. This is the task for all of us now to identify whether this activity I can call it as a taxable or exempted. That is the first task. The second task is what expenses I should call it as a common input tax credit. For example, I make a sale of say ready-made garment and also I sell a MEIS scripts. As you all are aware, from October, MEI scripts are exempted from GST. It means I have taxable activity, I also have exempted activity. I incur certain expenses, for example, printing and stationery expenses. I incur telephone expenses. I incur lot of other common expenses. Should I apportion all these expenses for taxable and exempted? How to classify these common expenses actually? Can I say that no, the whole printing and stationery is only meant for sale of ready-made garments? Nowhere it is linked to my sale of MEI scripts. So that is the task for all of us to classify. Can I take it as only used for business purpose, or can I say that no, this is pertaining to a both taxable and exempted activity? And please remember, exempted activity also includes your non-GST supplies also. So whenever you are going to see your credit side of your profit and loss account, I think that most of your financials will all have other supplies also, along with your regular supplies. So we have to be careful whether those supplies are exempted supplies. Interest incomes are there, dividend incomes are there, other rental incomes are there. So you have to see which are exempted and taxable. Accordingly, input tax credit has to be identified. So it is your decision to decide whether it is a common ITC or it is used purely for your business purpose or taxable purpose. So I think this is the decision which we have to take it for common ITC credit. 5% on common ITC for non-business purpose. We have in Rule 42 saying that 5% of your common credit is deemed to be as non-business purpose. What is non-business actually? It is nothing but it is used for your personal purpose and not used in the course of business. According to my view, if you can prove with your documentations and with your other supporting ledgers, whatever you have maintained, saying that whatever the input tax credit we are having is used only for business purpose, then this 5% reversal is not required. Because if you are going to do this 5% in the GST law, it will have impact in your other financial statement. Other law also you will have an option. In your company law, you can have a remark that it is certain 5% has been used for personal purpose, or it can have in your income tax saying that your income tax officer only you are saying personally that no, whatever expenses I have incurred, out of that 5% I have used it for non-business purpose. So voluntarily it get disallowed in your financial statement. So you have to be very careful to look into that. That's why they say that if you are able to maintain your advocate documentation in such a manner that you can prove that nothing is used for your personal purpose, I think this 5% is not required for non-business purpose. Then classification of reverse charge input tax credit from registered and unregistered. Why I have written here is because if you are taking any reverse charge from unregistered supplier, you have to maintain two kind of documentation to take a credit. One is self-invoice bill and the other is payment voucher. If you have not maintained these documents, you cannot take a credit of your reverse charge. So be careful on this for the documentation of taking a credit, especially from unregistered suppliers. Yes. Reverse charge on import of services versus import of services from related party. Because import of services from related party without consideration is also deemed as supply. Whereas reverse charge on import of services is notified in the notification on reverse charge, which says that if you are importing any services from outside the state, you are liable to pay the tax on reverse charge and take a credit of that. So that way this is an outward aspect and that is a inward aspect that we have to be careful on that. Import of goods versus import of goods from SEZ. If you are importing the goods from SEZ and if DTA is giving a bill of entry for clearance, then it is treated as IGST transaction and accordingly he has to pay IGST on that transaction. So you have to classify the import of goods from the regular import of goods and import of goods from your SEZ. Then section 17.5 credit versus eligible credit is a task for all of us to understand, because there are certain expenses where there is a dispute saying that if can I use it as an eligible credit or should I say it as ineligible credit. There are many expenses I can tell you where there is still a dispute on this credit aspect. So that way we have to decide on this classification. For example, if you have taken eligible credit, you believe that no, this maintenance of motor vehicle or insurance on motor vehicle should be allowed as a credit. You are not very clear that it is eligible or ineligible. So because of that wrong classification, whether it is going to have any impact we have to see. But in your 9, it is not required. Whatever you have taken in your returns, you can disclose it. ISD credit distribution wrongly and availed wrongly. No problem. I have also distributed wrongly. The ISD recipient also has enjoyed the credit wrongly. Is it any impact of that? Actually, it is nulling it off actually, but actually, I believe that even this has to be reported. Yes, what is eligible credit and ineligible credit, whenever it is distributed from ISD to its units, it has to be correctly classified. Input tax credit versus refund. Is it possible that you can take either refund or credit both? Yes, we give a declaration when we go for refund actually, that we have not claimed the credit on this. Whenever we go for, we attest ourselves that we are not claiming a credit whenever we are claiming a refund. Kindly check the transactions where possibly you would have claimed both the benefits as refund as well as a input tax credit on that. So that way classification you have to be careful. IGST credit versus SGST and CGST credit. Possible, no? Or SGST credit, CGST credit with IGST credit. Will it make any difference in your net tax payable? Yes or no? How it makes difference? Only the utilization will make a difference. The mechanism of utilization will make a difference. But net tax will remain the same. Only the method of utilization will go wrong if you are classifying SGST, CGST as IGST. As we all are very clear, IGST should be used in a specified manner, like IGST should be only for IGST, CGST and SGST. If it is CGST credit, it should be used first for CGST payable and IGST payable. If it is a SGST credit, it should be used for SGST payable and IGST payable. So there is a specified mechanism for that. So that will go wrong if you are going to do a misclassifications here. So I think that way we have to look into this classification and impact of that actually. SGST, CGST credit of other state classified as eligible credit. This is the most common we have done it actually. Yes, we would have gone to Delhi, we would have stayed in accommodation in Delhi, we would have got the hotel rent invoice, which you would have charged as a local credit of the local taxes of that, but we would have claimed it as a credit in our books of accounts. You are not eligible to take a credit of a credit belonging to other states. So if you have done that misclassifications, you can look into that. These are the only possible, I'm saying that this is the possible misclassifications. We would have done it while filing our 3B, and please see that this misclassification, please incorporate it in your GSTR 9, and this rectification has to be made in your GSTR 9C. Yes. Transit, this bill to ship to transactions, I have said as a regular transaction. I am not classified as bill to ship to transactions. Will it has an impact on your credit? I have wrongly classified this. It was bill to ship to transaction. I have wrongly classified as a actual transactions. I am not, in the sense I have wrongly classified it. I have not classified as bill to ship to transactions. Because bill to ship to is going with a different place of supply. So in that case, that classification also, if that classification is wrong, then whatever the input tax credit you have availed, it will also go wrong. In bill to ship to transactions, the place of supply is always a third person place of business. For example, the person is located in Hyderabad. He has given me an order to supply the goods to a person located in Bangalore. I am also located in Bangalore. The recipient is also located in Bangalore. The person who has given me an order is in Hyderabad. So what happens? I will be raising an invoice to Hyderabad party. Hyderabad party will raise the invoice to my customer. Both will raise IGST. But what I understood is, I am anyway supplying these goods to the customer in Karnataka. Can I charge SGST, CGST? So possibly I would have made certain mistakes in that. So this kind of transactions you have to see it when you are claiming a credit on those type of transactions. Wrong ITC claimed versus output tax liability. Whether the input tax credit is added with the interest component on that. So that way you have to look, because always wrong ITC claimed is nothing but your output tax liability of that. ITC claimed in April to September, track of current year versus previous year. That is the way we have to keep a track of that. So it means you have to verify the books of accounts till September and track the details accordingly. ITC reversal on discount versus credit note issued by supplier. This is also most of the, I think morning we were discussing on financial credit note and GST credit note. Financial credit note will not have implication of taxes, whereas GST credit note will have implication of taxes and reversal of credit accordingly. So in the discount provision, section 15 very clearly says that either you can disclose the discount in your invoice, or there should be an agreement with the recipient saying that I will be supplying the goods I'll be giving you a discount subject to certain terms and condition, and accordingly the recipient should also reverse the credit on that discount component. It means this condition is fulfilled only when the recipient is going to reverse the input tax credit. So that way we have to see with the credit note issued by a supplier to that extent whether the input tax credit is reversed for a discount deduction. So that way we have to link for input tax credit. Then accounting of input tax credit lapsed versus credit expensed in books of accounts. Today you are aware that yes, this input tax credit is lapsed. Are you going to pass the entry for that? Are you going to reduce it from your electronic credit ledger? It is not required. It is only a disclosure what is to be stated in your 9 and 9C. Don't give an impact unless it is required in your books of accounts. So that way we have to see what entry you have to pass when it is lapsed or what entry you have to pass it for a books of accounts. Yes. For example, you have taken certain credits as eligible. Your auditor, as an auditor, we have stated that this will become as an ineligible credit. How are we going to account it in our books of accounts? Because it becomes an output tax liability for the GST purpose. But how are we going to account that expenses credit which we have already taken as eligible, but now it becomes a cost in the year 18-19. So based on this report, whether the accounting entries have to be made in the books of accounts, or it is only a disclosure to the government saying that to this extent it is eligible and ineligible. So I think that way we have to see wrong classification of input services and capital goods. As I have already told you, GSTR 9 requires you to give the classification of input services and capital goods. And with the constraint of time, I don't have the informations how much credit is pertaining to inputs or input services or capital goods. So will it impact my GSTR 9 as incomplete or defective return? Yes. So that way we have to see for wrong classification. Let me rush through this because I think we all would have seen from that. Next 5 minutes, then I will just discuss on auditor's responsibility and then we can conclude it. See, 6A basically getting auto-populated from your 3B. Whatever the total credit you have availed it, that will get auto-populated. If you have availed net credit will be disclosed. If you have availed gross credit will be disclosed. What is gross credit and net credit? Possibly you would have shown in your net credit without any reversal or net of reversal. 1 lakh is your output, 1 lakh is your input tax credit. Ineligible is 20,000, so eligible is only 80,000. You would have disclosed only 80,000 in your 3B. You don't have shown that 1 lakh minus 20,000. So if it is 80,000, it will be shown as 80. If you are shown as 1 lakh minus 20, it will be shown as 1 lakh here. So whatever is there in your 6A, it gets auto-populated. Here all your, in 6B, all your inward supplies will be credit pertaining to your inward supplies will be disclosed. And 6C is pertaining to your reverse charge credit where you have to pay the tax and take a credit of that. This reverse charge is from the unregistered person, and 6D is reverse charge from a registered person where you are paying the taxes and taking a credit of that. And 6C is pertaining to a import of goods, credit pertaining to your import of goods, including supplies received from SCZ. So both inputs and capital goods have to be bifurcated, giving a IGST component of that. Yes, then import of services excluding inward supplies from SCZ. So whenever you are going to disclose any import of services credit, please exclude the supplies received from SCZ when you are disclosing the tax credit component of this. Details of ITC credit received from input service distributor. This is not what you are distributing, this is what you are receiving from your distributor has to be disclosed. Then here we have to give amount of ITC reclaimed. Actually I have told you in the earlier part that whenever you want to show the information here, you have to avail it, reverse it and reclaim it, only then it will be disclosed here. Then whatever is the amount, if you read the last instruction, they say that ideally this amount should be 0. What does it mean? They have used the word ideally and then they say it should be 0. It means what? Whatever is the data auto-populated in your 6A, the total input tax credit is a consolidated amount and you are giving the breakup of all that input tax credit in different tables, and then they say that in 6I it should be 0. The difference should be 0 actually. Whatever is auto-populated, it means you give only that information by giving a breakup of that taxes. That is what the annual return requires for input tax credit. Then they want the information of trans 1, trans 2 and whatever you have claimed a reversal for this 37, this common credit, block credit, all this reversal has to be specified in your table 7 from A to J, whatever is the reversal. If you see here the words, they are using reversed and ineligible. I think you can see in the table, they have used the word ITC reversed and ineligible. That's why it is very important to understand those concepts to see it as a ineligible or reverse credit. Then I think I'll just go to this table. Basically, we'll understand first, then we'll link it to the table. After giving the details of input tax credit to the government, one is picked from 3B, the other informations are picked from your transitional credit. It is picked from your ITC 1-2, whatever you have declared in your ITC 1-2 or transition credit, even that is also incorporated in your annual return. After giving all total credit structure and reversal, you have something called as net credit eligible as per your returns or as per your annual return. Now the next task is government. This is a demand notice. What I'm going to talk is a demand notice. What is that? They are going to reconcile your 2A, whatever is the 2A is reflected in your books in your portal, they are going to compare this 2A with input tax credit as claimed in your returns. If your 2A is showing say 1 crore, whereas in your books of accounts you have claimed 80 lakhs, what it means? 20 lakhs is lapsed. If your 2A is showing 1 crore, you have claimed 1 crore 20 lakhs, it means 20 lakhs you are inviting for explanation. You need not disallow that, you are only disclosing it. How much is as per 2A? As per 2A it is 1 crore, whereas in your books you have claimed it as 1 crore 20 lakhs. It means you have claimed excess 20 lakhs. It means this information they want to link it from your 2A. Now the next question for all of us to understand, which 2A they are going to take? Whether the 2A which is reflected today or the 2A which is going to be disclosed on 31st March 2018. Because the law is allowing you to take the credit and file GSTR 1 till October. So which credit they are going to take in 2A, we have to wait for the utility and see for comparison purpose. But if it is a negative, if your 2A is not showing the information and if you have availed the credit, you have to give an explanation to this. Whenever a notice is issued for this explanation, I think this is the source of information department will be looking here. How much is your 2A and how much you have claimed in your returns. I think this excess credit can be questioned also, and if it is a deficient, you have to reverse it as ineligible or as a unavailed credit or ineligible credit. This is a task for ourselves saying that, saying that, yes, we have claimed the credit more than 2A. Or we have claimed the credit less than 2A. So we are only admitting ourselves to by giving this, filling this table to the government actually. Yes? Now one more is reconciliation. The government is not eager to have a reconciliation on certain items. The government says, I don't want your reconciliations for tax paid under 9.3 or 9.4. I don't want any reconciliation on your tax credit on your import of services. I am not looking any reconciliation of ISD credit. It means what? Other than this, if there is any other credit, that will be reconciled with your 2A. Yes? For this, they said that anyway, it is not going to get reconciled. So this reconciliation, we are not eager to look as of now. So this will not be filled in your table as 8. Yes? Now the other important is import of goods. There is a lacuna in this content actually. What is the lacuna here? Government says whatever IGST you have paid on your import of goods, please disclose it here. Whatever, it can be used for business purpose or non-business purpose. It can be for taxable purpose or exempted purpose. Please disclose all the IGST paid on your import of goods. Then the government is saying the input tax credit claimed on your import of goods will be auto-populated here. The table which they have referred here is 6E. And if you see the 6C of the table, it is giving IGST credit only up to 31st March 2018. It is not considering the amendments made from April 2018 to September 2018. So there is a lacuna here. Possibly in the utility they will rectify it, and the balance, if any IGST credit on import of goods, will get lapsed accordingly. Yes? So this is very specific for import of goods. So they want reconciliation only for import of goods in specified manner. Now the next transaction is, they are asking the information here, particulars of transactions of previous financial year declared in returns of April to September of current financial year or up to date of filing of your annual return, whichever is earlier. I think they would have come out here whichever is later. Yes? I think that would have been beneficial, but as it is later, we don't have any option, only as a disclosure of taxable value. Please remember here, in the GSTR 9, they are not asking the invoice value. Basically, they are looking the taxable value on which you are liable to pay the taxes. This taxable value can be different from the value what you would have shown as a sales in your books of accounts, as supply in your books of accounts. So be careful when you're disclosing the taxable value and taxes on that actually. So they are asking the information of reversal of ITC availed during the previous financial year. If you have availed it, then only you disclose it. If you have not availed in your previous financial year, don't disclose in this amendment table. So that is what you have to remember. This reversal should be disclosed in your April to September return, then only it will be disclosed here. It will be picked up from 4B of your form GSTR 3B. ITC availed for the previous financial year. If you have missed out any credit, I think most of the credits we have availed in September, yes? Because while finalizing your tax audit, I think we have considered whichever input tax credit we have not availed it, and we have disclosed it in our September month return or previous month return. So all those availed information should be disclosed here with the component of CGST, SGST and IGST. Now, after understanding the important aspects of input tax credit in your GSTR 9, what are the possible variations in input tax credit we can see actually? Duplicate input tax credit incorrectly availed. You would have availed the credit twice on the same transactions because there is no link of your input invoice with your outward invoice. There is a possibility that we would have claimed the input tax credit twice. Difference of input tax treatment of certain inward supplies as per books of accounts and 3B. Possibly as per books of accounts it is eligible, but for 3B it is not eligible. Or for 3B it is eligible, but for books we are not taking a credit of that. So that should also be looked into that. ITC claimed in 3B but recorded as expenses in the books of accounts. There is possibility you would have claimed as a credit in your 3B, but it is already been expensed off in your financials. So these are the possible variations. We have to look into that. Now, what is the auditor's responsibility here actually? Tomorrow we will have a detailed discussions on 9C, but just as a part of responsibility, we have to linking this 9 with the 9C. What are the responsibilities we have? We have to recommend on additional liability, including non-reconciliation of ITC. Basically, 9C is not asking the column for availing the input tax credit. 9C is asking the information of liability on availment of your wrong input tax credit. So that should be very careful when you are looking on your recommending your additional liability for reversal of input tax credit. Identification of ineligible credit as claimed as eligible credit. If you have identified as eligible credit, at least to that extent you can show it in your 9C. Reconciliation of eligible input tax credit. I will show you one table where the government wants you to give the breakup of expenses with eligible credit. They are just not asking the expenses on which you have claimed the credit. They are asking, please give the details of expenses, give the details of total credit, out of that how much credit you have availed on that, or eligible credit of that. That is the task for all of us. Now we have to reconcile with our financials and bifurcate your eligible input tax credit. Verification of transactional, already I have told you, you have to give a note on that. Expenses where ITC is expensed might be disclosed in 2A because expensing it or taking a credit is your business decision. Whereas supplier would have already disclosed that as a 2A item. So is it unavailed credit or ineligible credit actually? It is unavailed credit actually. So that way we have to disclose here. Reverse charge credit claim, that should also be disclosed. Please see that if any it's not paid, it has to be made paid. Any ITC, there's a column here, any ITC subsequent financial year for the reasons. The 9C is asking the information you would have claimed in your financials, but it is claimed in your next financial year. What is the possibility? In your financials for 17-18, you have taken it as a credit. Whereas for GST, I have not taken the credit. Why? I have not fulfilled certain conditions. What can be the conditions? Invoice would have been received in March 2018, but physically I have received the goods in the month of April 2018. So what it becomes? It becomes a 18-19 item or it becomes a 17-18 items actually. It becomes a 18-19 item as a GST credit, whereas for financials I have taken the credit based on my invoices. So that we have to look into that. Or non-receipt of invoice is also possible. I would have received the goods, but I wouldn't have received the invoices. Because to claim a GST credit, I should receive the goods also, I should receive the invoice also. Input tax credit on claim of last installment or last lot. There is a provision in the GST law saying that if you are receiving the goods in a different lots or different installment, you are eligible to take credit only on the receipt of last lot or last installment. So possibly part of the lot would have been received in 17-18, part of the lot you would have received in 18-19. But for the financials, you would have recorded partly in 17-18 and partly in 18-19. So that also you can see that here. Or ITC on advances wrongly claimed. I have just made a payment to my vendor and also I have taken a credit of that. But actually you are not supposed to take a credit on receipt voucher. You are only supposed to take a credit only on basis of tax invoice. So that mistake we would have done here. So that should also be disclosed. So this is the format in which the audit report, that is 9C, is disclosing on input tax credit. So these transactions I have already explained you. So the difference should be given as a, what is the reason for difference between the input tax credit and the input tax credit as per your GSTR 9. And whenever we are going to take GSTR 9 credit here or this input tax credit, please calculate only for 9 months and not for the 12 months, yes? So that is what we have to see here. 12A wants the information only for 9 months. This is the table which is asking the reconciliation. I have not cashed the whole expenses. I have just cashed some of the expenses, indicative list of expenses. They are saying in reconciliation of input tax credit declared in annual return versus ITC availed on expenses as per audited financial statements or books of accounts. So individually you have to sit and take a ledger and you have to see how much you have expensed it and how much you have taken a eligible credit with a detailed expenses. There are a lot of 15 to 16 expenses they have classified with the residual clause as any other expenses. So you have to fit your expenses accordingly, and remember even the reverse charge expenses are also going to fit here only. It can be inward supply or it can be reverse charge expenses. Both will be fitting into this table itself, showing the value, amount of total ITC and amount of eligible ITC availed. It means they have used both the words. They are not clear whether it is eligible or availed. So they have used both the terminology as availed and eligible. So that way we have to use it for giving a breakup of this freight, power and fuel, imported goods, rent and insurance. Purchases if they are giving, please remember it can be for inward supply of goods, it can be for inward supply of services also. This is auditor's recommendation on additional liability due to non-reconciliation. If you see this table, it gives an indication that you cannot use your credit ledger for making a payment. You have a sufficient balance in your credit ledger, but there is also a liability in your GSTR 9C. So that is not permitting you to take a setting of your credit with the additional liability for GSTR 9C. So what they are saying, if you see in the table, I think if you can view it, it says to be paid through cash, very clearly indicating that if there is any liability because of reversal of input tax credit, it has to be paid only through cash. You cannot use your credit ledger for making a payment of this. Then we have it requires a certain other informations also in Form 9. That is supplies received from a composition supplier. They also want the information on deemed supply under 143 and goods sent on approval. Actually, I had an interaction with some of the officers. I wanted to know why this information the government is looking actually. Because already if you are treating it as a deemed supply, it will be called as B2B supply. Or if you are sending a goods sent on approval, and if it is not written within 6 months, it is already a B2B or B2C transaction. So why this special disclosure is required? They say we want to identify certain special transaction to say that whether it is been accounted or not. So they want a separate disclosure with value and taxes paid on such transaction. And the government is also looking the information on supplies received from composition suppliers. I think most of us have not maintained these details actually. We have not maintained this composition supplier as separately subject to my verification. I did not find anybody maintaining a separate ledger saying that I have purchased from a composition supplier, but this is the information I think you have to be extracting based on the documents maintained. Might be a bill of supply if you have received from your composition supplier, it is deemed that it is a composition. So you have to check it and again you have to incorporate it. So whenever you have to record it, it is from the recipient perspective and otherwise it is from a supplier perspective. The next information in GSTR 9 is refund claim versus refund sanctioned. Refund rejected and refund pending. For which period we have to incorporate it actually? Now also I am receiving the refund for pertaining to 17-18 because I have 2 years to claim the refund from the relevant date. So can I disclose that, or should I disclose only the refund claimed or rejected only in 1718? Based on the instruction, they says that it should be in 1718 if you have applied for refund, and if it has been claimed or rejected or pending, only to that extent it should be disclosed. Not the refund which you are claiming in 1819. It will come in a separate annual return for 1819, but for 1718 only you have to disclose in that respective year. Demand paid versus demand pending. Can I disclose here? I think most of us are receiving the notice from the department. Please give us the difference variation of outward supply between 3B and GSTR 1. Am I right? I think few of them would have received this kind of notices. So whether that should be incorporated here, that is not required, because to show it as demand, the demand notice should be issued accordingly. That is only an inquiry which they are making it, so that you cannot call it as a demand notice. So if there is any demand notice in that year, if you are receiving a demand notice pertaining to 1718, now you need not incorporate. Only if you have received a demand notice in that period, according to my view, it should be disclosed. So demand paid and if there is any demand pending. Then the next task is HSN classification. I think most of our GSTR 1 is not containing the details of GSTR HSN of outward supply itself. Now there is an additional requirement in GSTR 9 saying that you should give HSN on inward supplies also. Not only give the value, you have to give the quantity. You have to pay what tax you have paid on that. So this is the one more additional requirement in GSTR 9, which was not at all a part of your GSTR 1. Because GSTR 1 was asking only HSN classification for outward supplies, and many instances we have given it as an option. But now for 9, I think we have to see how the utility is going to work out, whether they are going to make it red mark or without red mark. If it is mandatory, we have to fill it, otherwise it can be an optional. Suggestion has been made that for the first year at least this can be made as an option, at least for inward classification. Then if you read this annual return verification clause, it is giving an indication. Actually, there is no separate column for anti-profiting clause, because trans to reversal will take care of that. But if you see here, there is an indication in a verification where the registered person has to sign saying that whatever the benefit I have claimed as a credit or a tax reduction, I have passed on into my buyers. I am acknowledging that. So that is what I think the verification clause, you have to read it carefully, whether the anti-profiting clause has been complied or not. To that extent, we have to see in your Form 9. Signed by registered person. And there is one more column for late fee. Please remember, the late fee which is stated in your GSTR 9 is only late fee for delaying in your filing your GSTR 9. Not for all late fee what we would have paid during filing our, that information government not required. Government don't want that late fee details which you would have paid it in your 1 or 3B, but they want the informations. If you are dealing in filing your GSTR 9, you have to give the information of late fees actually. So generally the late fee as specified in the Act is 100 rupees under the each Act, so it goes up to 200 rupees per day, and the maximum it can go up to 0.25%, that is 0.25 under the each state, so it goes up to 0.50 of your turnover in a state. So whenever this penalty will be calculated, this will be penalty of 0.50% of turnover in a state and not a aggregate turnover. So we remember on that whenever we are going to calculate this. Hope nobody pays this penalty, but in case if there is a penalty, it can go up to 0.25, that is 0.50% of your turnover in a state. And very important is there can be general penalties also which can go up to 25,000. So I think that is basically the informations which is required under the GSTR 9 and linking with your input tax credit and other information. So just try to give here the all macro aspects of input tax credit. So with this, with the permissions, is a time limit is there or shall I close it? Okay. So with this, I thank all the members who are present here for listening it. Thank you one and all. Thank you all the members. Thank you Bangalore branch.
A big applause to the Madam Annapurna Kabra. It's all went through the ITC. Our members also waiting for the ITC input. On behalf of members present here, on behalf of Managing Committee of Bangalore branch, I would like to thank Shri Annapurna Kabra for sharing her knowledge on the overview of GSTR 9 and ITC related and other info. I request Bangalore branch Chairman Shravan Gudutur to come forward and present a memento on behalf of all of us. A big applause, members. So before breaking for the lunch, the two important announcements. There is our sponsor stalls are there. QuickBooks, ClearTax, Taxman and Reliant. I request all the members to visit the stall. And also those who have got the spot registration, have not received the books, kindly collect your books in lunch break. Thank you all the members. Now we can take a lunch break and back with at 2 p.m.